Hey guys, Dave with Moneyology here. Hope everyone is having a wonderful weekend. Today is July 21st, 2019, and this is the Uranium Sector Review Part 1. This is the public version of the review that's going to be available to everybody. And Part 2, for those of you not familiar, will be part of the premium service, which will be launching very shortly. It will be publicly available for a short while, and then it'll only be available to premium subscribers. So I encourage you to send me a note at dave@moneyology.com. We have a few slots available for the first 100 subscribers, and those will be available at $37 a month or $399 a year to be part of our premium service. More details to follow. But I encourage you to reach out to me if you appreciate the work that I do. It will mean a lot to me to have you part of our community. Without further ado, let's take a look at what's taking place in the URA Uranium ETF. So starting with the URA daily chart. So here we are. We're in a bullish wedge here, but we had a unfortunate candle on Friday. Frankly, I was hoping for a breakout here and support off of this resistance line, but unfortunately we broke lower on Friday. Now granted, it was smaller volume and perhaps doesn't mean much, but typically Fridays are followed through with additional downside on Monday, so we'll have to see what happens on Monday. There's some additional downside in this wedge all the way down frankly to 11:30 area before one would get concerned. Nonetheless, once this wedge breaks, if it breaks to the upside, which is the high probability, then we can see a renewed up move. But for the time being, there's still weakness in the short term in the uranium sector. Here's uranium on a weekly chart, and you see here we're in this coiled bullish. It's a bullish formation. It's kind of a descending bullish triangle, but it needs to break above this trend line, and it hasn't done so far. So now we're hovering above support, and we need to hold these lines of support, and we need to break above the upside for there to be a real bullish move to the upside. Now, what the positives that I see is that we're above the trend line in momentum. Now we're retesting it from the upside. We couldn't quite break above the 50 RSI, which often serves as very strong resistance, and it did so here. But I want to see a bounce this week. That would be nice. If we break below that, I would get slightly concerned, and definitely would be watching these levels around the 11 area. Here's URA on the monthly perspective, similar type of chart here, and again we're falling short above. We've got a couple of moving averages. Here's the 9 and the 18 is indicating the blue and the red. It's serving as resistance, and then you've got the trend line here. And I want to see this break for the bullish case to play out. But for the time being, we're still in a bearish consolidation. It's bullish if it breaks out. The probability that these descending triangles break to the bullish upside are typically about 60 to 70%. So, but until it does so, we're still in this consolidation and with a slight advantage to the bears. Here's Uranium Participation Corp, which tracks the uranium price of uranium. And you see we had this rounded bottom pattern for about, let's say, better part of 2.5 years. Now we're kind of in this bullish consolidation right now, and where we had a nice rally to close the week, last week above the 50 RSI and above both moving averages, but we closed last week lower, and so you're going to see some fighting back and forth between the bulls and the bears on this end. I expect it to move higher, but I leave the room open for the possibility of a retest lower. So I'm watching this very closely. The one thing I will say is PPO is firmly above zero, so I would love for a back resumption to the upside with a move back above the 50 RSI level on U. Here's the same instrument, Uranium Participation Corp. From a monthly perspective, you see here we broke out above the nasty downtrend that we had since 2006. We broke out above that in 2018. We back tested it here. Now we broke back above that. We are still below the resistance of the 9 and the 18 monthly moving averages, but there are a lot of signs both on the technical and the fundamental side of the story that suggest that we will be moving higher. But until the charts say so, I'm just showing you what I see. We're right now at 49.79 on the monthly, so we've got about 10 days here to close the month above the 50 RSI, which would be very, very bullish. But until it does so, it's a waiting game. Overall, guys, look, the fundamental picture in uranium is very, very strong right now. The technical picture has weakened after that Section 232 report, but let's give it a couple weeks to shake out. Very often, when you have a massive breakdown, as we saw with energy fuels, uranium energy, and your energy, the American names, it takes time to repair charts, and that's what we're seeing. That's what we saw this week. I expect a resumption to the upside, but of course, what I expect is not always what happens, and I defer to the markets to tell me what is going to happen, or technically what is happening, and I will do my very best to share with you my thoughts. So stay tuned for part 2 of this video. We're just going to go through the sector, the charts available to us on stock charts, and let's see where there are opportunities.